Hello, viewers, and welcome to the channel once again. So it is another trading week, and this is the weekly outlook for the coming week. So let's dive into the markets and let's see the opportunities that we will be having within the coming week. So first, we are going to be starting with gold and see the kind of opportunities that we can find on gold. So on Friday, we saw this strong impulsive move on gold. So like we always do, or like I always analyze, first we go to the daily time frame to check markets, or we look out for our market structures and our key levels. So we still, or gold is still reacting to this current support zone or key level on this particular market. And then we've already had this impulsive move from here. And then we saw this market correcting, or this correction phase, and we've had another retest, but then see this rebounds on this particular level. So there is a probability that gold might create another impulsive move over here, because at this particular level, or with this particular swing leg, we did not, or gold did not break this zone. If gold had maybe done something like this, or breaking this particular zone and retested, we could have looked out for short position. But then gold just retested on the support zone. So all these bearish move that happen at this particular area, all this bearish move were correction move. So there is more probability that we will be looking out for next impulsive move on gold. So let's straight down to the lower time frame and see the kind of opportunities that you will find from our external strategy. So we go down to our 4-hour time frame. So on our 4-hour time frame now, we are going to be mapping or marking our external structures from here, and then we look out for shifting market structures for a confirmation that this market or gold will be going bullish from here. So on our daily time frame now, there's something over here. All right, you can see that we had this order block. We had this big order block from here. So we're having this daily time frame order block. So we need to refine this particular order block on the daily time frame from the lower time frame to see the exact zone that gold can react from. So if this zone is being reacted, we see that we had this extreme order block. That was exactly where gold reacted from last Friday. So markets, or we have a support zone below, or a key level below, then we had this order block where gold reacted from. So now, since we are having a support zone, and then gold is reacting or reverse from another block, we will be looking at or we will be focusing on buys from this particular level. So considering our external structures from here, we have this break of structure. Now, to have a shift in markets, we need to see a break at this particular level. And then we saw this particular break with the wake of this particular candle. So that is a break of structure. That is a break or a shift in what market structure. So over here, what then can we look out for? Now we look out for what our key zone where market can reverse to, or area in the market where orders can be what can be found. So this could be order block, fair value gaps, and other stuff. So looking at this particular level, we can see that we are having this imbalance over here. Now, when market have imbalance, what the market does is that market needs to what refill or fill that imbalance to create what sufficiency in the market before market is going to what is going to move. Also, within the imbalance over here, we have this what breaker block. Now, this is what we call, or this is what in ICT is being termed as what a unicorn. When a fair value gap and a breaker block are aligning together, it is called a unicorn zone in the market. So this becomes what our point of what interest. I will just use either a fair value gap or breaker block at this particular level. But in ICT, it is called what a unicorn zone. So this becomes what our point of interest, whereby markets can react to. Now, I always say this, that when you are choosing your order block or your point of interest, now an order block is supposed to have key or some key characters that make the order block what's valid. One of the characters that we talked about is what liquidity. We have displacement. That is what a sharp move from the order block. So you can see that around this area, we had this what impulsive what move over here, or this bullish what impulsive what move. Now we have liquidity over here. So I always say this, that either liquidity or what inducement, anyhow that you use it that makes sense to you. But I normally like to call it what inducement. That is a liquidity closer to what to an order block. So we have this inducement over here that gold can come down what to. So on gold, if we go down, or let's go down to the daily 1 hour time frame. So if you go down to the 1 hour time frame, all right, this becomes what our point of what interest on gold. So we can expect, or this become our point of interest for gold. So if gold comes to this particular zone, then we can look out for buys from this zone to the upside. So if we look at the top, are there any form of liquidity or order block? So let's read back to, yes, so to see that we have some imbalances at this particular level. So that is it on gold. That is it on gold. So this becomes what our setup or expectation on gold if only we get to, or market comes to our zone. The next pair that we are going to be looking at for, or the next pair that we are going to be looking at for is what silver. So let's look at silver as well. So when we check on silver, so like always, we use the top-down analysis. So with top-down analysis, I personally like to start from the daily time frame, and always on the daily, I map up my major structures, look out for key levels that market reacts to, support and resistance zone, and other key levels. So this is silver over here. Now, on silver, we are having a key level at this particular point. We are having a key level at this particular point. We had markets breaking and retesting this particular zone, came back another retest at this particular zone. So this becomes a very important or a key level, because it has been constantly rejecting or causing market not to go down further again. And then we had this strong impulsive move. So the strong impulsive move from silver. Then another impulse move with a break of structure. We are having we had this current correction at this particular this area. So on silver, we could see that market structure is what bullish. Now, I always say that the major structures always gives what the direction of what of the market. So if we are having this major high being what broken, all right, that means that the bullish idea is still what is intact. So the next thing that you look at for after a breakup structure from a major high is to look out for your point of what interest. So if we have major high like this and a breakup structure, so now what we do is that within this particular swing leg, we are going to be looking out for what point of interest. So depending on where we can identify our point of interest, either an order block at what the extreme zone or support and resistance, maybe a breaker block or any other level. All right. So once market pulls back and react to the zone, that is where we take what our trade from. So looking at this particular area, we saw that market left, or there was an order block at this particular what area. And like I said, the daily time frame are always zones are always what very, very wide. So it is not advisable to be using that. You just go down to lower time frame and then look out for what we call look out and refine the zone for what a valid order block. Now, at that same zone, we can see that we had equal high, equal lows, liquidity. You see that we are having some liquidity around this particular point. So when markets are made this impulsive move, markets still came back to what to sweep that kind of what liquidity, giving us this particular what pin bar, leaving us with this particular pin bar. Now we know that pin bar is what a reversal, what pin bar is a reversal confirmation. So if we are having what a bullish market plus a bullish market liquidity being taken, and then we are having what price action confirmation what with a pin bar from a daily time frame. Now the bullish what idea is much what valid at this particular point. So now we are just going to go to lower time frame and then look out for zones and what other entry what opportunities. So we then come to our 4-hour to check out on our external what external structure. So this becomes what our zone where market what reacted from, taking out this equal lows what's liquidity or inducement from there. So when market open or at market open, we've seen that market has already what reacted to this particular order block. Market has reacted to this particular order block. And then always I say that whenever we are taking any trade, one confirmation that we need to look out for is what liquidities. So if there is any form of liquidity, that market will be what may be going after, or market might be going to what to take. So we have this trend line liquidity above at this particular point. So that means, or that gives us what further clue. Also, we have these areas which are imbalances, this order block. So there's the more probability that silver will be what's going upwards. And further, we have so many price action confirmation, this engulfing candle, this indecision or pin bar candle as well. So many confirmation for a bullish market. So let's refine the zone again and look out for areas where market can then move from. So on our day 1 hour time frame, when we come to a 1 hour time frame, now market has what reacted to this particular point. If we refine the zone, or I don't see, let's see if we can refine this particular zone again. So yes, if we go down to this particular point, what that we can do is that if markets, if we refine the zone, that is it. So we had what a unicorn reaction. Like I said, whenever you see a breaker block and a fair value gap like this, that is what a unicorn and zone that we are looking at for. So over here, we had internal structures, we have a breakup structure, and we had an internal what market structure shift. So I told you that when it comes to market structure shift, it is a first clue that market can what to change. Market might be changing direction. So that is our what market structure shift on our lower time frame. So if markets then give us a reaction or a pullback like this, that is what I will be actually be looking out for because our first zone has already been what mitigated where we missed it. So if then we get a retest to this particular point instead of what going to jump in, I would prefer that market give us what something like this, giving us some kind of what a head and what shoulder pattern at this particular what level. Then we can what look out to go long on silver, go long on pot and silver to this with about 1:2. Let's see, about 1:4 risk to reward ratio targeting this particular high. Targeting this particular high. So that becomes what the trade opportunity on silver. That becomes the trade opportunity on silver. So let's also check on currency pairs and let's see the kind of opportunities that currencies might be giving. So on currencies, I'll be looking at Euro USD. So looking at Euro USD, okay. So on Euro USD, let's go to the weekly and see. So Euro USD is in a kind of what consolidation around this particular zone has been consolidating within this particular range or this particular what level. That is all that Euro USD has been doing. So when we go down to the daily time frame, let's check on the daily time frame and let's see. So looking at Euro USD, we had this bullish move around this particular point. Now there is a kind of support at this level. There is a kind of support at this particular level. But then we had a support at this particular level and we had or we saw markets reacting to this particular block or other block at this particular zone. So we had this level being taken and then around the support zone we have this block 2 being mitigated. That is it on Euro USD. So we had some kind of bullish structure around this point. So if we refine the zone to, let's say, 4-hour time frame to see where or the opportunity that we may find on what Euro USD. So market then reacted to this block when we refined it. So over here, I'm not getting any clearer hot zone. So I'll just check on 1 hour and see. So when we go to the 1 hour time frame, so we can see clearly we have some blocks. We have some blocks within this particular zone. So we have this zone being taken out, and then market reacted to this particular zone. So our next point of interest can be this particular hot point, and we can expect a long position. We can expect what, a long position to the upside, a long position to the upside. We're about 1:3 risk to reward ratio. Right, so that is it on Euro USD. So that is it on Euro USD. You can either target the next high. So if you check, we have what structure, what break around this particular point. So that means we are in a bullish market. From the bottom, we see that market is constantly reacting to key levels. Market is constantly reacting to key levels. So when market is doing something like that, we like, or I personally like to follow what the markets. So these are some of the pairs, or these are some of the trade we can be looking out for on this particular week. Also, we can let's add US oil before we end. So on US oil, we had markets. Also on US oil, we have this kind of bullish market for formation, where market is constantly what rejecting to key levels over here, and this is the current what block that we are having now. At this zone over here, we have this 3 bearish candle coming off, and we had this engulfing. We are seeing this what engulfing candle. So if this particular candle closes or completely engulf this one, then US oil might also been going what bullish, or we may have a pullback by what US oil, depending on the fundamentals or the war that is going up. I always say that when you see the war what's escalating, that gives what a bullish impact to oil, and when it is what the tension is reducing, that makes oil start to drop. So we have market reacting toward this zone, which is a very important, or a key zone. Now you can see that we are continuously retesting towards key bullish, what key levels over here. So that means you need to be more focused on bullish what opportunities. This was what a pullback. So at this point, at this particular point, this is the block, the other block that market what reacted to. So if we connect these zones as well, we had this channel structure what formation. So depending on what the market does, if we get market to break and retest the channel, then the long position might be valid. and then you can expect what long on US what oil as well. So these are some of the trade opportunity that we can look out for the coming week. So if you are not in the Telegram channel, all the setup are going to be posted on the Telegram channel. So do make sure that you join the Telegram channel. We have the link in we have the link under the description. If you check on the under the description, you can find what the Telegram channel over there. Every day we share what trade opportunity to the community. So join the community and also benefit from it. Wish you a profitable week and see you in the next video.